and then we average them out, not only over one day, but over a couple of days. These are all computer models that are run every day that tell us how the atmosphere is going to unfold.
Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. It's Thursday, January 19th. Let's get in the zone, the cash money zone. Well, I got this on because my boys are looking at the grains today. There's been quite a bit of volatility. Vol's going up over in the beans. We've basically seen a counterintuitive trade as this dollar's been weakening against the euros for the past several days. We've still seen corn, soybeans all coming off a bit. It's a little bit strange. Today the dollar continues to lose a little bit of strength against the euro dollar, but now we're starting to see this snap back, kind of trading above, just was trading above the $6 in the corn. It's coming back off just below that. That's going to be a key support resistance psychological level for these markets over here. But going over what happened over in the financial room overnight, we had a lot of stuff going on. Basically, Europeans got a lot of great news, which caused the equity markets to get a little bit of lift. The bond auctions over in Europe, we had France come out with their 2-year auction. Rates came off a little bit, about 1.05%, I think it was, coming off from about 150 area. So it's come off about a half a basis point. Spain, same thing. Their 10-year came off to about, what was it, about 5.5%. That's basically 5.4%. That's down from 6.9%, so a full basis point and a half. Great news for those guys. What did that do? That's basically causing all the banks to get a little bit of lift. We saw that the German bank, Commerce Bank, said that they don't need any help from the government or the investors. They got a little bit of lift. We saw France, Société Générale, and Italy's Unicredit all up 12% overnight. All right, take that. So that's basically what's rolling over into the United States. The stock market came up. We got a lot of good news on our economic front. We had the consumer price index came in basically in line. Housing starts, stuff like that, those were right in line, a little bit better than expected. But then the real good news came in form of, what was it, jobless claims came off a lot, about 50,000. That was a huge uplift. If people are getting jobs, they're not claiming unemployment. One caveat to that is that the EUC, which is basically extended benefits, increased by 105,000. Not really great news. People are not just going on for the short-term unemployment. They're going out to that 99-week area. Not really a great thing but for the most part, we've seen all of this economic data, manufacturing, factory orders, everything's increasing, which is really starting to help this unemployment front, which is good news for us. Saw like 200,000 increase in hiring over the past couple of months. Great news. We haven't seen that in a long time. So basically a little bit of a factoid here. Ben Bernanke has kept rates at unchanged for the longest period of time since 1971. Is that going to change? Basically, Fed funds are pricing in. Most people expect for the longer term, 6-8 months out, 65% of the people or economists think that it's going to basically stay zero, probably until 2013. That's what the Fed funds are pricing in. Low rates until at least January of 2013. All right, that's about all I've got for you. It seems like all the markets are kind of bouncing around here. We got above that S&P 1306. We're starting to really build a huge volume bell curve right in there. So it looks like, we're kind of above what the fair value is. So I think we're going to kind of see the bulls and the bears really kind of fight it out between here and 1300. If you can't take that, take it easy.
So there are a lot of things that have gone on that are really terrific, and it makes this a really exciting profession, and it's only going to get better.